stock of the day is Seven Group. This after it lobbed a takeover offer for full control of Boral, valuing the remaining 28% stake it does not already own in the building materials maker for just shy of $2 billion. Under the offer, Seven Group will offer a minimum of $6.05 share in cash and scrip to Boral shareholders. And in a statement to the market, Boral saying it recommends shareholders take no action on the offer, adding an independent board committee has been established to review it. And Seven Group adding it will raise its offer for Boral by another 10 cents in the event it achieves an aggregate 80% stake in Boral, or if Boral's board unanimously recommends the offer to its shareholders, or both. And the offer would be increased by another 10 cents if Seven Group's stake reaches 90.6%, the compulsory acquisition threshold. Back in 2021, in fact, Seven made multiple takeover offers for Boral, which it kept rejecting, citing undervaluation of its business. It currently owns 71.6% of Boral. So let's get to the view of our experts. And David, what are your thoughts there? Obviously, Kerry Stokes has been trying this for quite some time, and Ryan, of course, Ryan Stokes. What do you make of this latest bid to actually take full control?
Yeah, well, it's I guess it's a sensible strategy from Seven's point of view. As you said, they own just over 71% of the business, so they don't quite have full control, but they do have both listings. So they have said that it'll save them about $3 million a year as far as annual listing costs. But then they're able to get further synergies with the overall business. The other smart thing that Seven are doing is using the fact that their share price is up as high as it is. So it's a predominantly scrip offer, about $1.50 of cash, but the rest is scrip. So they're actually able to benefit from using the high share price. As you can see there, Seven have done very well as far as the shares of their own business is concerned. So it's a relatively cheap way to get full control of Boral. Smart business decision, and it means that Seven are becoming a little bit more like an Australian version of a Berkshire Hathaway type of business, that it's a conglomerate, that it buys good businesses and keeps management in place, but also has management oversight. So smart thing from their point of view. From a shareholder point of view, we've got a lighten on both Seven and Boral. So I think it's probably would be a good opportunity for Boral shareholders to potentially look at cashing out of the stock, either through selling on market at current prices or holding on for Seven. We've actually got a lighten recommendation on Seven, so we think that the overall business is probably overvalued at current levels, and may indicate why Seven are using their shares for this takeover offer as well.
Yeah, given that elevated share price. All right, that would make sense. Daniel, what are your thoughts?
Oh, the deal makes a lot of sense. I think it's about time it is consolidated. If you listen to the call with Vic Mansell about Boral, I mean, it's just fantastic how a change in management and a change in ethos of running a business can lead to such big results. He was talking about in Boral when he joined, they were so far behind the eight ball when it came to pricing, and that had always been a knock on Boral. Like, it was always known as the lowest price, lowest cost provider, and now that's how they've led that turnaround. So I think it makes sense to now get consolidated. Agree with David, offering consideration via shares, I think is a good idea at this point, given how much of the company they already own. It's almost like a share cancellation type of thing in Boral itself. To talk about Seven Group for a moment, they had probably one of the best reports I've seen this period. Westrac, smashed it out of the park. Even the Coates business was very strong, and cash flow conversion very impressive. 12 months ago, everyone was very skeptical of Seven Group. Gearing was, over 3 times net debt to EBITDA once they made the acquisition. And there were a lot of skeptics in the camp, and how far they've proved them wrong. So I'd probably be holding the shares. Yes, they're exposed to certain cyclical risks, as we know, but we just had a call update and guidance effectively saying that the demand for their products across the board in those divisions are very, very strong. Order books are at very high levels as well. So I think the shares are warranted to trade at current valuations, and the quality of those businesses are just very resilient. The cash flow conversion as well has been above a lot of their peers in the mining services. So, hats off to them. They've done a great job. I think the share price is deservedly so at very highs, and I would still hold them at this period. I think there's still more strength to come if you heard the commentary there. So I got positive things to say about them at this point.
Yeah, okay, that's sounding like you're bullish all round, but a hold nonetheless. But you're not seeing them as overvalued at this point.
Not necessarily. The earnings momentum there, Andrew.
Yep.
I mean, WestTrack, it smashed the park out of earnings, and no one was really talking about it. The stock opened up like 2% on the day. That really surprised me when we got companies like JB Hi-Fi, profits down 20%, hitting 52-week highs. So that's kind of the story of reporting season for me. Just this really stark view and expectations for companies at the moment.
Okay. All right, that is our stock of the day, Seven Group.